So, you've been hearing about Apple doing a stock split, and you're probably wondering, what does that mean to you as an investor? Well, I'm here. I'm Simone Kason. I'm your cash counselor, your money problem solver, the dopest chick on your timeline. Why? Because I'm usually talking about money, stocks, and we. And I want to talk to you about what stock splits are and what it means to investors and traders. So, let's get down to the nitty gritty. The first question that you probably have is, why would a company do a stock split? And right now, the company that everybody is talking about is Apple, and they're doing a stock split, but we're going to get into that a little bit more. But as a whole, when a company goes public, it's set out what we consider outstanding shares, and there's a set number of shares that they can be able to sell. And these outstanding shares are based on supply and demand. That's the price that we pay for it. Well, I'll get to that a little bit more. But what happens is that the board of directors make a conscious decision to be able to say, hey, maybe we need to lessen the price so that we can get more smaller investors in. Now, why would somebody want smaller investors in? Check it. I'm going to tell you more about this. So once the company decides, listen, we probably need to make these prices a little bit cheaper or make the stocks more affordable. Let's talk about why they would want to do that. Why would you want to have the stock prices be more affordable? Well, in one case is if a company that is in a sector, which what we'll talk about more later on if you go into my YouTube videos, but a sector is going to kind of be like that industry or whatever, whether it's financial, whether it's tech, all those different things. And I really kind of go into that a little bit more on my YouTube channel when I talk about heat maps. But why would a company actually want to lessen the price? Well, they could be totally on a higher price than a lot of the other companies in their sector or in their industry that are very similar. So if a company is really high priced, they're probably going to get less investors to be able to come in. That's the first thing. Now that we have God and Google, we have a lot more individuals who are what we consider retail investors. And so they're going to be actually investing a little bit smaller. And one of those examples are Robinhoods, people that actually invest on the Robinhood app. And so the average investor from a Robinhood app is about $200 to $1,000. So they're not going to be looking to buy just one stock that's probably $1,000 or whatever. They're going to be looking at stocks that are going to be a lot cheaper. So what that does is, though, instead of the company getting a lot of individuals or getting a small amount of individuals that are purchasing high expensive stocks like institutional investors, insiders. Instead, they're looking to be able to attract a lot of smaller investors and make it affordable. And so the price will go down at one point, but it usually pops back up. So what does this mean? Right now, Apple is looking to do a 2-to-1. And what that means is pretty much they're going to slash the prices. So for every one stock that you own, it will now be worth two shares. So put it in perspective really quickly. If you own one share of a company and that company is actually worth $100, then instead you will now own two shares, which are $50 a piece. Really simple math, right? So that's pretty much what stock splits actually do. You're splitting it. No, do you lose your position or lose your ownership? No, no one loses value or whatnot. It becomes equal, but it just makes it more affordable and more and less expensive when you're actually kind of going into that. Now, stock splits can go that way, but they can also go in reverse. So if a company is the price is really low, right, and they may need to be able to keep a minimum price to be on whatever exchange that they're on, then they may double or do what we do a reverse split. And that's kind of when you divide the amount of the stock. So instead of going into one way where we say one stock and we split it into two, we take two stocks and we split it into one. So it would be just the exact opposite. If you own a share of a company and it's $50, a share. Then if you double it, right, they put it together, then they will shrink the amount of shares that are outstanding, cut that in half or by whatever it is that they're going to do, bundle them, and then you double it. So now you own, instead of 2 shares equaling $100, now you own 1 share that would equal $100. Why would a company do that? As I said, it's a lot of different ways. They might want to make it more attractive. Maybe the price is too low for the market sentiment and the market expectation. Maybe they need to be able to have a certain amount of a price point to be able to stay on a particular exchange. So there's a host of different reasons on why companies do this, but you need to know the game. So what does this mean to investors? Yes, there's going to be a couple things that you'll probably see. You may see some depreciation, or a downturn when the initial is done at first, whether it be a stock split or a reverse. But then there also is a great time for like our traders and for long-term investors. You will probably see an upswing at some point because the company becomes more attractive. So this is one of the ways that you can actually leverage and utilize a stock split. Should you buy into a company just because it's splitting stocks? Absolutely not. Of course, as I said, always make sure that it meets your risk tolerance. Always make sure that it meets your strategic plan, and always make sure that you're able to purchase the stocks in the amount of still being able to keep your portfolio diversified. You should not be putting all of your eggs in one basket. Now, of course, if you like this information and you like me, make sure you go to www.csimonecason.com. We have a brand new YouTube channel that is coming up. This is one of our quick headliners. You definitely can check me out on my podcast and so many other things. And everything is there on the website. So I look forward to talking to you guys soon. Again, if you like this video and this tutorial, make sure you check out our website, go to our YouTube page, and continue to follow me. And as always, I love you guys like I love myself.